Shareholders are sitting around patiently waiting for this pop. What are you going to give? Is there some kind of dividend coming down the line? Are there some share buybacks? At what point current investors or new investors coming in should get interested in you? Have they got to wait until you get your debt package in place in the new year? Hello and welcome to our viewers on Crux Investor, also to our listeners on Cruxcast, our podcast series. We're here today with Tim Carstens. He's the MD of Base Resources, their mineral sands operation with an asset in Madagascar. Tim, how are you?
Very well, thank you.
Well, thanks for joining us. Now, you're over from Perth, but you're sort of doing the rounds in London, and you going anywhere else?
No, not on this trip. This is just one of our regular visits to support the listing over here.
Fantastic. Good. Okay, well, let's start off with a minute summary on the business. Why don't you tell us a bit about that?
Sure, we're a pure play mineral sands company, listed in Australia and here in London. We've got a highly profitable, successful operation that we developed in Kenya. It was Kenya's first large-scale mining project. And we've now picked up the learnings from that and looking to apply it in a new project we acquired about 18 months ago in Madagascar. Right. Very similar style of mineral sand operation, a little bit bigger in terms of capital, and looking to bring that into being and create a pretty unique mineral sands company that's got a very clear growth path, highly profitable, and something that we think is going to have strategic relevance in the sector.
Great. Okay. So, for people who are new to mineral sands, explain what it is.
In our terms, mineral sands, we basically produce three products. Rutile is the biggest component of our suite in Kenya. It's the highest grade form of titanium dioxide. It's about 95%. We also produce a lot of ilmenite, which is a lower grade form of the same material, titanium dioxide. And the majority of both of those go into the production of pigment. Yep. About 95% of all of titanium dioxide materials go into production of pigment. So everything you see with a colour.
Right. So paints, plastics,
papers,
you name
inks, food dyes, you name it. Makeup, all has titanium dioxide pigment in it. So consumption is very tightly tied to global GDP. It's more of an urbanisation and wealth driver, I guess, than industrialisation. And then the third component for us is zircon, which is quite different, predominantly used in the ceramics industry, in glazes and in tiles and the like. Also has some other sort of industrial uses as well. Right.
Okay. So let's talk about last year. Okay. Yeah. You said this project's been going, 18 months been working on this project. How'd last year go for you, 2018?
Well, I mean,
into 2019?
Well, the two parts of the business. The first is Kwale, the operating mine in Kenya. We got our first shipment away in February 2014. So we've been going for a while there.
So what's that? That's cash producing, profitable?
Yep, significantly cash producer.
Right. Any sense of those numbers?
Yeah, I mean, last year our EBITDA was $113 million US. It was a record year. Revenue was about $209 US. So very, very significant producer.
So debt-free?
Debt-free. We have now paid out the original $235 million project financing that was used to part fund the construction, with net cash of 20 million. So a very strong year last year from an earnings perspective. Another very strong year from a safety perspective. We haven't had a lost time injury since February 2014, right across the business. We haven't had a medically treated injury for 2 years. It's an extremely strong safety culture in our business.
Let me just touch upon that, because most people don't bother talking about that. So that's because the nature of the mining, the process, isn't it?
Partially. I mean, it's a less, I guess, inherently dangerous form of mining than compared to hard rock underground, for example. But there's still an awful lot of moving parts in our business. Road transport, a lot of risks, if you like. I mean, the reason we focus on it, one is it's so central to sort of how we want to go about doing business, but it's also a pretty good window in on the performance culture of the business in general. Yeah. Because you never find a business or an operation that has really good safety performance and poor operational performance, because the management disciplines that drive one drive the other.
Yeah.
The other reason it's really important for us is we've come into a country with no history of mining in Kenya, in terms of no large-scale mining. And we're 65% of the mining industry. We're 98% Kenyan workforce, so roughly 1,000 people on site. So being able to embed that sort of safety culture in a environment that's not used to it has been a significant
And
achievement.
you're also spending a bit of money on some CSR activity, and there's a couple of $1 million set aside for that.
Yeah, look, we do spend a reasonably significant amount each year. It was about 3.8 million last year on community development and environmental enhancement programs. We've actually banned the use of the phrase corporate social responsibility in the business.
Noted.
Largely because it's the language of obligation. It's what companies feel they need to do to be seen to be corporately socially responsible. We take a slightly more strategic view on it, in that for us we need to have a community and a government that has a felt fair exchange of benefit, mutual benefit with us. So that, at one level we have a really proud, happy workforce. We have a community that will defend the project or the mining operation against any sort of political interference. And then at the other end of the extreme, we have a community and a government that are a fantastic reference for us when we want to move into somewhere like Madagascar, where we've now gone. We've been able to point to what happened in Kenya, and you very quickly have a government that recognises you as someone they want operating in your country.
Okay, so let's talk about Madagascar now. So it's a relatively new operation. How are things going?
It's going really well. I mean, we bought it as a project, so it's going through the study phases at the moment. So we completed the pre-feasibility study in March, which reinforced our view of it being probably the best undeveloped mineral sand asset in the world. We'd looked at a lot of projects before we decided it was the one we wanted to go for. We're now completing the definitive study, which will be out in December, and that will then sort of form the basis for completing the financing for development.
So how are the conversations on financing going?
Oh, going well. I mean,
What are you looking for?
We're looking at a combination of things at the moment. There will be a fairly significant debt package as part of the funding. We're pursuing two options. One is a classic project financing, very similar to what we did in Kenya, and in fact involving a lot of the same banks who had a fantastic experience with us first time around. They like the way we do what we do. They like the project and the way it gives them an entry into Madagascar in ways they probably haven't had a lot of access to before. So that's one debt funding option. We're also pursuing in parallel a Nordic bond, exploring that possibility. And looking to put in place something around a $350 million sort of debt facility. And in parallel with that, we're also progressing a few joint venture discussions just to sort of understand what might be possible with some industry players.
Okay, that's kind of interesting. So things obviously going well. Let's talk about share price. So if I look back at the history, 2016, I guess it took off in Kenya. Share price went screaming all the way up to sort of 19. Very nice. Yeah,
it's been a bit of a wild ride. I mean, almost from the moment we turned the plant on in Kwale in early 2014, our commodity prices were falling, and so we actually got to the point in February 2016 of having a market cap of $16 million. That was the low point. I think it was 2.6 cents or something, and then we saw commodity prices turn. And in about the middle of 2016, and share price shot up. We've been up in the 30s. Amazing. But we've largely tracked sideways since we acquired Toliara, sort of sat in a channel, 24 to 30 cents, somewhere in there. And to a certain extent, that's, I guess, explained by the market needing some more clarity on exactly how we're going to fund the project.
Well, that's what I want to get into now, because if I look at some of the statements in your PowerPoint, which people should read, get into, you've mined more ore, the numbers are generally positive. You've paid down debts. You're debt-free, net debt-free. The share price has continued on a general downward slope. So it's been fairly up and down, but the general trend is slightly down.
I disagree with that. It's been trending up for the last 12 months, but basically it's exactly where it was 12 months ago. So.
Okay, people can have a look at the chart and work out how they feel about that one. But what I'm trying to understand is, what is the strategy, go forward strategy here? So where are the loyalties? You've got loyalty to employees, you've got loyalty to the community, and loyalty to shareholders. But what are you doing for shareholders going forward? What's the growth component to this story?
Well, I mean, Toliara is quite clearly the growth component.
But when does it kick in?
Well, on the sort of timetable we're on, we're aiming to be in production by the middle of 2022, which will still see us with overlap with Kwale. So I have 2 operations running. You've got that diversity of earnings and extremely powerful earnings profile. I mean, Toliara, based on the PFS numbers, is going to spin off free cash flow each year of around $135 million. So very, very significant cash flows across the two. I mean, one of the challenges in developing an asset in Kenya or Africa generally is getting full value in a share price sense for the earnings you generate, simply because of this perception of risk. And that's particularly exacerbated when you're a single asset, single jurisdiction company. So our strategy had always been we've got to get Kwale up and moving, use it to build our business model, use it to build our capital base, our reputation, our scale, with a view to then taking all of that to move to the next asset, to get that diversity happening and build a company with a number of operations that smooths that out, and starts to unlock the latent value of the earnings.
Do you think you're telling that story well at the moment?
Oh, look, we're telling the story as well as we can at the moment, because as I said a minute ago, the key unknown for people is exactly how we're going to fund it. And we can't explain it any more than we are at the moment, because we've got all these components that are moving forward sensibly. They can't move forward any faster, because obviously completion of a DFS is central to landing on that. So we're moving forward with that story at the pace we can, and it's a long-term exercise building a business from scratch.
Right, and do you, I mean, how much of the success of this, because you're throwing off cash, you're paying down debt, you're looking after the administrative side of things. What I'm trying to get at is trying to understand at what point current investors who may be, using your scenario, treading water, or new investors coming in should get interested in you. Have they got to wait until you get your debt package in place in the new year? Is that the moment they should really be looking at you?
Well, I mean, for me, I think people are crazy not getting involved now.
Why?
But I understand why. Because we've got a very clear picture of what the value is in this business, and it's a question of time before people actually see that. As I keep repeating, for a lot of people, the lack of clarity around exactly how you're going to fund it gives people this sense that, maybe they're come raising. And that's something that we need to dispel. The other part to it is that we have a ridiculously supportive shareholder base where the top 20 hold 91% of the stock, the top 3 hold 65% of the stock. At the current share price, no one's really interested in letting any stock go.
Isn't that part of the problem?
Well, it is part of the problem, no question. But it's why we need to be a little bit patient with this, because for someone looking to get in a meaningful way as an institution, you've got to get yourself comfortable with the value proposition. You've then got to be able to see a pathway through to acquiring some stock in the first place. And then you've got to get yourself comfortable that you can exit if you wanted to.
Sure.
So this liquidity share price standoff is unquestionably one of our challenges. The catalysts for breaking that over time are quite clearly, getting the DFS out. So there's some, that's the next level of resolution around the shape of the project. But the critical catalyst, as far as I'm concerned, is when we're able to go out quite clearly and say, here's what the debt looks like, here's what any joint venture looks like, here's how the rest of the funding comes together, and this is what that means for you shareholders. Now, I think if people sit and wait until that happens, they might find they miss out. Because it's a real rate point.
So that says to me you're interested in institutional investors, not so much retail.
No, not necessarily. I mean, we've made a concerted effort now to really reach out to retail. We just seem to have been more successful in getting to the institutional side of things. We've done quite well there, but the retail is something we need to spend more time focusing on.
Why is that?
Just because when you've got limited liquidity, they're the people who are going to set your share price, and then that price becomes the price at which blocks trade. So, it's something we do need to. And do you
find that's a much harder story to tell to retail in terms of the Africa? You mentioned the Africa component here. Also, mineral sands, little understood.
Yeah, one of the challenges with mineral sands is there are so few pure play mineral sands companies in the world. So it's not a story that people get to touch regularly. Even amongst institutional investors, they don't see too many mineral sand companies coming around. So there's definitely that. It's a less immediately clear sector in the sense that you don't get a lot of commentary about it. It's not like people talking about what's happening to the copper price or nickel or whatever. So it's a bit harder in that, and then you've got the Africa factor as well, which a lot of people just aren't really quite comfortable with what Africa's about.
I guess with gold more so than most other minerals in Africa, they might be a little bit more comfortable. Okay, so
I always find that interesting that people seem to be more comfortable with gold in West Africa than super simple mineral sands in East Africa. It's quite. It's
I guess it's the size of each market, right? Gold's a very big market in terms of value terms, and it's been around a while. And mineral sands is new, and it's a smaller market.
Yeah, it's more the nature of the countries you're talking about. I mean, there's a lot more policy volatility in West Africa than there is in East at the moment. Except for Tanzania.
Tanzania, I like Tanzania. I've worked there. It's good.
It's a great country. But interesting policy environment. But anyway.
People are waiting to see if there is a knock-on effect. So let's come back to the shareholders then. So shareholders are sitting around patiently waiting for this pop, and you think it's going to come when there's clarity in on your debt package that you're constructing. But what are you going to do for them? So can you generate a lot of cash, right? Great. You're hoping to replicate that in Madagascar. What are you going to give? Is there some kind of dividend coming down the line, or there's some share buybacks? What are you doing to make things more valuable for them?
Shareholders fall into two categories in our world. There are the shareholders who would suggest that a dividend would be good, and then there is the vast majority who say don't be stupid. We're in base because we're looking for that growth. We can see the project coming next year. Why would you pay a dividend now ahead of making a major investment next year? So, while we have every desire to be a dividend payer, and it's part of the business that we're building and the diversity of cash flow we're building, right now is not the time.
But isn't that the trap that producers fall into? That they create cash and they go, we need to grow, so we need to make an acquisition. They can spend a lot of money on an acquisition, and then they spend money on the capex and opex, getting that into production to produce more cash, but they kind of forget about the shareholders along the way.
Look, as a generalisation, that's fine, but to suggest that we've forgotten about shareholders is not really appropriate. Every company has its own peculiarities and its own circumstances. We started at Kwale with an asset that had a short mine life. It had a mine life of 11 years. We've built an extremely robust business and business model and team. The option that you're talking about would be for us to sort of run that for cash and close the business and moved on.
It's not quite, but...
Well, yes it is, because you can't get too close to the end of the mine life at Kwale when we're talking about mid-2024 without having something to replace it. You also, we're not making the most of our platform that we've built if we're not applying it to something else, and our shareholders have certainly been encouraging us to go down that path. And we can see such significant opportunities in the sector because we had been so profitable during the even in the downtimes. We were still able to service that debt. We were, not financially stressed in the way a lot of our competitors were, which meant we were able to grab what we think is the best project to add to the portfolio and get to that next level. At which point we will be a very significant cash generator and a completely different set of options at that point. For us, this was absolutely unequivocally the clear path.
Okay. I guess what I'm saying is for institutions who perhaps will sit back and play the long game, that's one thing. For retail, family office, high net worth, who are looking for some kind of return, it's a very different model. Everyone's got different investment models. Right? So your focus at the moment is around the institutional guys because it's 90% of the business.
We actually find we have a huge number of very long-term retail. I actually take a different view. A lot of the institutions are actually much more focused on short-term performance, and a lot of our retail shareholders understand the long game of building this company, and they're involved in it. And the point I'd make to shareholders who are looking for that short-term hit in the yield in the next 2 years, we're probably not the company for you. So I suggest you go somewhere else.
Okay. Yeah, I guess that's what I'm hearing loud and clear.
People can vote with their feet. I've got no problem with that. I mean, we've been very clear about what we're doing with this business, and we've got a very clear path on how we develop it. And shareholders need to choose whether it's their profile.
Nothing. Absolutely right. So next year, a few things coming out. Obviously, at the beginning of the year with the DFS and the raise. What's happening the rest of the year?
Well, the DFS will be in December, and then the rest of the year will be spent very much bringing together the funding components, working towards being in a position to make a final investment decision to start the major construction over the course of next year. We've given ourselves a fair bit of runway through until probably the end of the third quarter. Next year to get all those pieces to come together, because there's a fair bit of complexity in it when you're talking about potential minority joint venture participation, debt facilities. We've still got to pin down the final fiscal terms with the government in Madagascar, so all of those pieces need to come together over next year, and so the big thing we're working towards is getting that decision made. The other thing that's getting a lot of focus for us is mine life extension at Kwale. Now, I said before that we've got ore through to the middle of 2024. We announced a rather large resource on a separate dune called the North Dune during the year. It's very big, 171 million tonnes, but quite low grade. So we're doing a study on that at the moment to see what subset of that could make sense as mine life extension. And we've got another couple of areas around Kwale that we're exploring to see if we can identify more.
Do you want to give us a little summary for investors looking at this from new as to why they should be investing in you guys?
Yeah, look, I mean, we're trying to build what is a very unique mineral sand company. They're, in terms of being a mid-cap company, heading towards having 2 operations. At the moment, we've got one very profitable one we think we can extend. We've got another world-class development asset. We've got a business model that's been very successful in Africa. We do win quite a lot of awards for our environmental stewardship and community engagement. And the whole team that brought Kwale together is still with us. So the whole team that did it the first time around is there to do it again. So we're not doing this for the first time. Got a very robust financial platform to be able to build that business. But the long-term aim here is to create something pretty unique, because in our sector there's really only Iluka at $3 or $4 billion market cap, and then you drop down to Kenmare and ourselves, sort of around the $200 to $300 million US market cap. And we're trying to create something quite unique in that space with multi-asset sort of business with a growth profile.
Great. Thanks for the story. It's nice to hear it. It's news to all of our listeners for sure. Do stay in touch.
Cheers.
Thanks a lot, Tim. Appreciate it.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.